I remember what it was like when I first started trading. I was so excited because I knew I was going to be a millionaire and I was going to be there a millionaire in 1 week.
Oh,
Have you ever
man.
been there? Have you ever thought you could make $10,000 a month on a $50,000 account? Sounds like a dream, right? Well, today we're going to unravel the truth behind expectations and why unrealistic expectations might be setting you up for frustration rather than fortune. Hey, good day, everybody. Welcome to today's session. Let us know where you're dialing in from. This is Dennis Wilborn. This is the Trading Truths podcast, and I'm joined by the insightful mindset king, Mike Lamothe.
Oh, you're talking about me?
Yeah, Mike. Hey, how's it going, man?
Very good, very good. How about you?
Like I said, it's just been fantastic. I love doing this session with you. Everybody knows we did a real great session last week with Pat Walker, and before that with Jeremy. Today, Mike and I are going to be talking to everybody about, unrealistic expectations that new traders face. Mike, before we jump into the guts of this, what are the top three? You can tell I'm going off script immediately, right? What are the?
Oh, good.
But we'll bring it back home. What were the top three unrealistic expectations you had when you first wanted to become a trader?
Well, the first thing that I thought was you put money in, more money comes out after. So if you put money in and you leave it there long enough, that it'll grow.
Hmm.
And so this was my story. Well, when I first started out, I went to the bank. I didn't even know how to invest. I just thought that you open up a brokerage account at a bank. So I went to Astoria Federal, my local bank at the time, and I asked them, "Hey, I want to buy some stocks," and they told me, "Whoa, way too risky. What you want is this," and they hand me their mutual funds, and so I hand over my money to the pros, and so I thought, well, the professionals are going to handle it well for me, and I'm going to give it to them for a few years while I'm doing my undergrad. So plenty of time, and they're professionals; they know what they're doing. And so this was around 1999. And by
Okay.
the way, I also thought that, well, mutual fund, loads of diversification. How could I possibly go wrong? Well, I didn't really know much about stocks back then, and I checked my account in 2002. And to my unfortunate surprise, I had about 20% less than what I handed them. And I'm like, well, how did this happen? The pros, lots of time, all this diversification, gone. Well, learn the hard way a few lessons there.
That's kind of what happened. Something similar like that happened to my mom and dad a long time ago, back in the mid '70s. You know how oftentimes when the market's been doing really, 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 really good, the and everybody's going, "Hey, I got to get in, and then the uninformed that's when they tend to invest, and that's what my mom and dad
Yeah.
did. They thought, "Hey, let's jump in." They got into some mutual funds, and it was right just on the tipping point of a bear market. And a year later, they were down, as you said, down 15, 20%. And they swore they would never invest in the stock market again. And they believed that they were cheated and that the market was rigged against them, which, as we know, we've been doing this a long time, those were totally false beliefs. You know what I'm saying?
Yeah,
And so,
absolutely.
anyway, guys, today Mike and I are going to dive into the first big myth is basically consistent high returns. Specifically, the idea that you can take a little and like $50,000. Now, $50,000 isn't necessarily a little, but I think people, when they come in to start trading, have this idea that if I can just make X per month, that will replace my salary and I can get out of the crappy job that I'm currently in, that I absolutely hate, that are taking advantage of me. And so there's a lot of emotions going on there. And after all, trading looks so simple. So, Mike, why do you think so many new traders get hooked on this idea and the reality behind it, or the lack of reality behind it?
Well, I think that I think that these things are possible. But just
Mm.
because something's possible, it doesn't mean that it's probable.
Oh,
So in the age that we're in, you're able to just go onto your phone and scroll through Instagram, scroll through Twitter, or any social media platform and find no shortage of people posting gigantic returns and people posting that, oh, all you have to do is just get in at this point and then sell it up here, and they ring the little bell, and it's real easy to do all this. But unfortunately, the reality is that it's not as simple as so many out there might have you believe it. And maybe that's intentional, maybe it's not. Maybe a lot of people just like to share wins and
mm,
share large returns. But in any case, I think that it can feed the mindset of, okay, here's something that's possible. To the point that you made earlier, I don't really like where I'm at. So if it's possible to have make 20% on a stock, that seems reasonable enough, right? The Nvidia is up how much this month?
a lot, over
Right.
30%.
So is it possible for me to take all the money that I have and put it into one thing and see that one thing go up 20% in a month? Well, yeah, it is. But is that something that we can consistently do? Is that
That's good.
something that if we did that 100 times, would we be better or worse? Well, if we took all the money that we had and put it into something, basically going all in, it would be akin to going to the roulette wheel and going all in on 34.
Okay.
Maybe a hit. So then you take everything that you just won and you do that again. And you do that again and you do that again. Eventually, you're going to blow yourself up.
Yeah.
You can't
Yeah.
just keep on going all in and hoping for the best. Well, what you need is a system that is, and maybe I'm getting a little ahead of myself here as far as the rest of the conversation is supposed to go, but I think that if we if we continue to put ourselves in a position where we go all in, blowing ourselves up is inevitable, and those dreams of a better life become unrealized.
I totally agree with that. I mean, it's almost like the dreams of a better life then become the haunting voices that will keep you from succeeding in the future, because for traders, because they come back and said, hey, wait a second, wait a second, wait a second. Hey, remember, you did this back then and you lost everything. And so those haunting voices can then just screw your mindset up so badly. I think part of the thing, I agree with you wholeheartedly. And I think some of the other landmines that we traders can run into is, what really is reality? Well, let's take a look at some of the professional traders the hedge fund guys, what's their optimal return on a yearly basis? Well, on a yearly basis, not a monthly, a
Mm,
yearly basis. Well, it's somewhere between 15 and 30%.
mm,
Did you know that? 15 to 30%. And so, and that's recurring year after year after year. What's the return on the majority of the majority of money managers out there? Very few even beat the S&P. You know that, right? I mean,
yeah.
so I kind of laugh when I hear something like Kathy Wood said that, Tesla's going to $2,600 by, 2029. While that may be a pipe dream, you have to ask yourself when somebody says something like that, why are they saying this? Do they have more information that we have? Or do they own a lot of Tesla and want to influence where the prices are going to go?
Hmm.
Because you take a look at her track record, actually, of her ARK fund, it hasn't beat the S&P in years. Yeah, there'll be, as you said earlier, there's those one or two trades that are just amazing. It's kind of like the Lamborghini guy trades, Hey, I'm in
Mhm.
1,000% on this. And drive around. They, I don't even know if the Lamborghinis are theirs or not, or they just go down to the dealer and sit next to one, and maybe they hire a cute little blonde to come in and sit with them too. But the fact of the matter is always kind of ask yourself when you see stuff like that, ask yourself the reason why. Why is this being done? Why are they saying this? Because in reality, you check the fundamentals. Unlike something like Tesla, check the fundamentals. The fundamentals are not that good right now, right? Then you check the stock chart. The stock chart on it is not that good. It may be formulating a base that could launch later, but right now, if price is king, you want to be really careful on buying in. What are some of the other um, what are some of the other landmines a person can run into, encounter in chasing high monthly returns?
Uh, well, I think aside from blowing yourself up, right? You step on a landmine, that's pretty bad. I think that, well, uh, early on, that's what I was after. And
Mm,
it took me a solid 10 years before I finally gained any traction at all because I
mm,
was trying to turn a little bit into a lot far faster than uh, was reasonable.
right.
Now, why do that? Well, if you're hungry, you want to eat now, right? So
Mm,
let's how about this analogy? I'm gonna plant some seeds outside. I'm hungry now, so let me start pour some more water on it and pour some more water on it. And hey, I'm just gonna leave the sprinkler on all day, 24 hours a day to get this thing growing.
okay.
Hey, it's not working. I just drowned my plant.
Yeah.
And that's what I did. It takes me a long time to learn things. It took me 10 years of doing that to finally figure out, you know what? I need something better. And
Gotcha.
you know, I don't think it's much of a that big of a coincidence that I found the same guy that you found, Bill O'Neill,
Right on.
and then
Yep.
found the strategy that actually worked. Why? Because it's based on historical reality.
Yep.
Stocks had X, Y, and Z criteria before making their big moves. Some of that criteria was fundamental. Some of that criteria was based on a chart and repeatable patterns. And you buy here. If it goes up, you take some profits along the way. If it drops, you cut the loss short, and it's plain and simple.
Yeah. Plain and simple. That I think kind of brings it back down to earth. Um, you mentioned the thing about the guy who plants the seeds and then overwaters it and all that kind of stuff. I think another thing that seed planter does, especially in the stock market, is they plant it one day, immediately go out and dig it up to see if it started growing yet.
Yeah.
You know, and so that in fact in turn disrupts the ability to grow, right? And so that's really good. When you guys are listening, hey, let us know where you're tuning in from. And I want to thank you guys for joining us today, and also let us know which of the platforms you're on. We're on Facebook, we are on LinkedIn, we are on YouTube, and we are on X. Some of our buddies over there on X, thanks a lot for joining us today. So let's, one of the things, Mike, so go on, Mike, to there.
Okay. Yeah. Yeah. So, Dennis, how can new traders set more realistic expectations and still stay motivated?
Mike, thanks a lot. That's a great question, for one thing. I agree with what Mark Minervini says. The ease of entry into trading or into the market is too easy. People walk in without a plan, and because they walk and filled with what they think is going to happen, what they think trading is going to be like. But unfortunately, that is a process where at a point where they don't know what they don't know. I know I was there, and part of the other things is I think that they don't recognize that they're going to have a skill to master. And so they jump right out to start it. And I've been studying this here recently, and it's just called the journey of knowledge or the journey of mastery. And on the left hand side of the column, you've basically got the confidence level. And across the bottom, you have basically knowledge. And everybody just jumps right out of there on the left-hand side thinking, oh, how hard can this be? And they call that, when you jump into that, they call that point in time, they call that stage one, unconscious incompetence. Or some people refer that to as the peak of stupidity. I know that's a little bit blunt, but I can relate with that. As I said earlier, they don't know what they don't know. And so they push off and they're going to start to learn. However, they don't have a process they don't know what to learn, but secondly, they don't have a process to learn. They don't know about incremental learning. And they try to jam everything they can find on YouTube, or if they're following somebody like you or like me, they'll try to jam in all the videos that we have out there to coach them and teach them how to trade. They try to binge on that, and then it just leaves them more confused. But at least they're progressing and moving forward to stage two, which is called conscious incompetence. However, there's another word for conscious incompetence, and it's called the valley of despair. Because you've got into that trading, right? And you're looking up and going, uh-oh, I didn't know this was going to be this much work. Oh, I didn't know it was going to be this hard. Oh, I'm losing money. Oh, And no matter where you look, every other choice looks better than where you're at, right? That is an absolutely critical point in the progress of traders. Why? And you may ask why, and why am I telling you this story? Because hopefully the traders that are out there listening to us can relate to this. That is a critical point, the valley of despair, because that's where the trader will make a decision. And they're going to either say, well, crap, it didn't work, so I'm going to look for something else. And those are the guys who are they are the legendary seeker of the holy grail of trading. So they go
System hunters.
all the way back to the beginning, right? I mean, you've seen a couple of those, haven't you, Mike, in your time?
Oh yeah, I've been one of those.
So they
I
get
have a whole yard full of half-dug holes. Just
okay,
come take a
right
look.
on. So these guys go all the way back to the beginning, and they bitch and complain and say, "Well, that autopilot trading that didn't work," or they'll say, "Hey, Mara, well, that didn't work for me," and they spew out a bunch of junk. While in reality, do they reflect on themselves to say, "Well, it didn't work because I didn't work"? Typically not. And I'm sorry if I'm getting a little bit edgy on this, but that's what you dial into these things for, right? For the
Yeah,
ones,
who needs it's sugar coated,
okay,
right? You need to get it straight. That's why it's the Trading Truth podcast.
that's right. So, but for the people who persevere, they get then coming out of the valley of despair. Over here, they come out of the valley of, they come out of the valley of despair. Where am I doing this?
Yeah,
Looking on my,
yeah. The
yeah,
way
they
that
come, there we go,
camera
here we
goes.
go, I
Yeah.
got it. They come out of the valley of despair and start up the slope of mastery. And then they get to stage 3, which is called conscious competence, where they know what they're doing and they can actually start adjusting how they trade. They're not having to follow specifically the system that they signed up for, because they can start implementing their own ideas in that place. And then after that, they get this to stage number 4, which is called unconscious competence. And that's where they can look at a chart and look at the fundamentals, and without being conscious of it, they know, and they know what decision they have to make to have a successful, high probability trade.
Huh.
So,
Yeah.
if they learn to follow this kind of proven path and have a great mentor or guide, they find out that it's about setting smaller, achievable goals and focusing on consistent growth, incremental growth, rather than hitting those home runs every month. It's also crucial to develop a solid risk management plan.
Yeah. I'm kind of curious. For those of you that are watching live, one, thank you for being here. Dennis and I appreciate you, but I'm also curious to hear too. Well, what category do you think that you fall in 1, 2, 3, or 4?
I like it. Great question. And don't be a ghost out there. Please put it in the comment section.
If I had to guess, I would say that most people would probably fall into 2 and 3.
I would say, yeah. I would say that is oftentimes because how do you tell, okay, of your members or your premium members, Mike, how do you tell when they've progressed to the point that they are moving up the slope of masteries to point 3 and point 4?
Their questions, the types of questions that they ask.
Oh, can you broaden that out a little
So
bit?
sure. So when you're uh, when you're in that second stage where you're starting to where you know a bunch of things, but you don't know what you don't know yet. Um, I think that people tend to think that they know. So
Mm,
they will, rather than asking questions, they'll assert what they think that they know
okay.
and try to tell uh, me or others that this is the right way to do things,
Mm, that's
right?
good.
And it could be anything from selection criteria to managing risk to anything else. And maybe they do have some sort of a system. And I try my best to never assume where they're at on the scale, even though I can start to get a good feeling of where they are based on the types of questions and comments that they ask. But um, the thing that I ask them in return is what they're putting forth. Have they tested it? Have
That's
they done
good.
the back testing? Have they gone in and manually looked at a whole bunch of criteria that they're putting forth? Well, where did they get this information from? How have they studied it? Did they read it in a book? Did they hear it on a video? Did they go and test this themselves over a couple of hundred trades? Most
Yeah,
of the time, the answer is no. Most of the time, the answer is I heard this somewhere, or I read an article, and uh, maybe I Google searched, and that was my
sure.
research, and that tells me quite a bit of where somebody is at. And
Yeah,
then over time, as they progress, they tend to make less comments, but ask more questions. Like if they see me putting out a trade, like a trade that I'm interested in now, I haven't taken yet because it hasn't broken out yet, but I'm interested in SMCI, Supermicro. So they might come to me and say, well, why are you interested in this one at that particular juncture? And so I'll explain it to them. And
yeah.
if I uh, mention, say, well, there's some things that I'm seeing in here on a daily time frame, on a weekly time frame, and I'll go down and look at intraday charts. They might ask a question about some of the details that I put in here. Maybe they start to pick up on some of the nuances.
Mm, that's good.
That's telling me that they're trying to dig in and trying to understand.
Right on. Yeah.
Because, well, that's how you, if you're trying to model success, you need to understand the details.
Right. So you basically said if I understand what you're saying, it the real newbies are making comments, are coming in and saying, well, this is what you should do, even though, as we said, they're new. They don't know what they don't know.
Right.
So about your system when it comes, but as they progress, they start the quality changes in that they start asking questions, and that will help them implement their understanding. Is that fair?
Yeah, I think that's fair. I think that's fair. And
Okay.
another common thing a newbie would ask is, "Hey, what do you think about this one?" Right?
Yeah.
And it's not like,
I love that.
how
I
did
love that.
you,
What do you think about this stock? XYZ.
right? Oh,
And
well, this one is trading at about $4. It's been in a downtrend for a year, and
yeah, I know. And you go, and so and you go back and say, "Well, I wouldn't trade that with your money, and that should wake them up." Yeah, I love because we have, autopilot trading, and I know you have something similar, is we have our training center, or that people come in and they can then, as they become a premium member, they jump onto what's called the pre-flight, or not the pre-flight, but the flight path to profits. That's a 90-day training program to walk them through how to use the system. And I guarantee that if they, will apply themselves and do that 90-day system, they will become a successful trader by the end of it. Or be able to successfully implement the process and all that kind of stuff. And so, one of the things that I know, because without application, knowledge is basically nothing more than a bragging right. In order for it to be a joy and be fulfilling, you have to apply your knowledge. And so, on our training center, I can go in and actually see which person has actually gotten into the flight path to profits, and I know where they are in the process. And did you know that the majority of people who bail and jump out of autopilot trading premium service never open the training package
oh
that
yeah, I
would
didn't know
could
that.
could be the keys to their becoming a successful trader for a long time. They'd never open it, and they'll come back and they'll ask for a refund, and within the first 30 days. And I'm good with that, but I've been tracking it, and it recurs and happens over and not over and over again, dramatically, because we have a high level of people who stay with us and actually go through it. But the ones who I like to categorize them as being professional quitters. But again, I'm just in a really raunchy mood this morning, I guess.
Yeah, geez. No, but it's true. It's very true. There's a lot of people, I think, that will sign up for things and hoping that, well, I took action, I signed up for something, and then not take the next action, which is actually them doing the work. It's like
Yeah,
the person that signs up for a gym membership and doesn't go.
yeah,
Well, it
yeah,
takes a little bit more than that to get into shape.
yeah. And so, well, like I was sharing with you earlier, before we came on live, is that we're in the process of implementing our membership process for new members. We're going to have a check block basically that's going to say, when they go to, pay for the service, and it's going to be a check block that says, if, will you commit to going through the flight path to profit 90-day training sessions, um, when you become a member. And if they don't check that, or they basically don't check yes, and they do go ahead and sign up, then I will immediately refund their money, because I want to train and have high quality people who are willing to understand. They're able to step from the I want to the I will. Because if
Right.
you just stay at the I want to, you basically don't really, I want to be a great trader. I want to make, a good, income from trading, but you never stop to answer the question of, here's what I will do to become one.
Right.
And that's,
And I think that this speaks to both you and I, like who we are.
oh,
Well, we
heavens,
both
yeah,
want to help people.
exactly.
And so for some people, they shouldn't be doing this. And that's the reality. And if you're just here to pay a membership fee and not do anything with it, well, then the way to help that person, cut them off. Keep the fee. Don't trade. Put that money back in your pocket. Pay off something, right?
Yeah,
But
yeah,
if
yeah,
you're not going to take the knowledge and do something with it, then you're you're wasting your time. You're wasting our time. That's not good. We want the best for you.
yeah. You ever seen a tick on a dog?
No, I haven't.
They don't have those in New York, do they?
Well, I don't have a dog, but
Oh,
um,
okay. And and I know this is unfair comparison, but a tick on a dog. I was raised in the countryside, and so we had to always be watching out to make sure the ticks didn't get on our dogs and all that kind of stuff. But a tick will latch onto a dog and just suck blood, suck blood, suck blood, and just grow grossly, large, right? The
oh,
tick
geez.
itself. And it's nasty, nasty. And I kind of think that that's kind of like the person who's just engaged on developing and gaining knowledge. It,
Mm,
they're very knowledgeable, can spout their knowledge off. However, the productivity of the knowledge, from the knowledge, and the application of the knowledge just isn't there. And so they just continue to suck, the knowledge in. But as anything else, and maybe I'll come up with a better analogy to this in the future. If that's the way you're looking at it, it is kind of a selfish, self-centered way of doing things. I'm not condemning knowledge, but it's when you apply the knowledge and share that knowledge with other people that it benefits you, but also benefits that other person. So, what does it have to do with trading, you may ask? Well, I think that is a lot of, there's a lot of absorption going on out there, but nobody has a plan of execution. They don't have a trading plan. They don't have a lot of different things. And which brings us to kind of like our next topic we wanted to jump on really quick, which is the concept of how can a trader, what are some of the steps a trader can, oh, here we go. What happens when a trader doesn't understand probabilities and lets a few winning trades inflate their confidence? So can a few lucky trades set you up for a big fall? Or will and so we're going to break that down right now. What's your thoughts on that, Mike, as we jump to this second topic?
So can a few lucky wins actually set you up for a big fall? Yeah, especially when it happens early. Especially when it happens early. I've seen too many people fall into that trap where, um, a friend of mine, he likes to sell options,
Okay.
right? Well, so he has the strategy that he was telling me about, selling puts. And so there's a couple of key stocks that he'll look at that have some ETFs behind it. And, if it continues to rally, right? So, well, what is it? It's the TSLL, the Tesla ETF,
Yeah, yeah.
right? So it's low price. You could sell that and it'll rally, right? Because I know this stock and I know it very well, and I've been doing this for a while, or so the story goes. Well, there's certain spots on that chart where if you implemented this strategy, right? So let's say that you sold TSLL, you sold some puts at $12.
Right.
Right, and well, price is going to come back and rally. So I'll just if the stock gets put on me, right? Because we're getting a little bit in the weeds here. So with an option, if you sell a put, it gives them the right to put it on you, basically. Uh, then you would get the TSLL at say $12.
Right.
And he's okay with that because, well, I think that price is going to go up, and I'll just keep on selling calls if it gets put on me. Well, TSLL is trading at $7 right now. So
Yep.
what price calls are you going to be selling to recoup that money? And how long are you going to sit with this thing to get back in? To go back to the person that wanted to make 20% per month, right? Or have general income coming in per month.
Right.
Now, all of a sudden, they went all in, let's say, on that TSLL trade, sold all the puts. It was put on them at a much higher price. Now they can't get rid of it, or they're going to take a major loss. They'd be selling at about a 40% drop.
Sure. Yeah.
So that's one example, well, one real life example of a strategy that worked in the beginning, and well, now you're kind of paying the price of that strategy not working out and not thinking it all the way through.
Exactly. Yeah. Nah. And so that would be, as you said, a strategy that was ill conceived that didn't take into consideration probabilities.
Right, and it wasn't robust enough. It was something that worked once, and so the assumption was that it will work again in the future. And without doing factor modeling, we don't know. Without doing back testing, we don't know, and that's one of the reasons why that's actually something that I talk about in my book, The Trading Mind Wheel, as one of the core skills. Testing, going back
Yeah.
and making sure that whatever strategy that we have is actually going to work if we do this strategy 100 times, 1,000 times.
Yeah.
If
No,
we
I agree wholeheartedly. And before we continue on, because I have something I want to say about the probability aspect. Folks, if you are joining us, basically, I'll ask again. Please let us know where you're tuning in from. Mike and I really appreciate it that our friends are checking out what's going on, and also Mike and I are open to let us know who you would like us to invite onto the Trading Truth podcast. And if you happen to watch a favorite podcast, then do me a favor. Let the host of that podcast know, communicate with them that Mike and I are ready to go anywhere in the United States via Zoom. No, no, and talk on their podcast, because we would like to continue sharing our message of trading truths, where we are blowing up stock market myths. And so if you'd like to see us do that on more podcasts, then please suggest and recommend us to some of the podcasts you watch. Appreciate that a lot. So,
now, Dennis, can you tell us some practical steps traders can take to better understand and utilize probabilities in their trading?
Well, one, yeah, I've got a couple of them, Mike, and one of the things that, again, it is a process of how you think. A lot of people talk about you have to understand probabilities and all that kind of stuff. Well, to be really honest about it, when I studied probability in grad school, I sucked at it. I was terrible. I did terrible in the class and all that kind of stuff. And because I couldn't come up with, what's the problem? Well, I did get the one where what's the probability of coming up heads or tails on when you flip a coin. I got that one. Okay, I understood that one. However, when it got into the much more complex things, and I think that a lot of folks out there go, I don't want to get into probabilities because it's too complex. And so I want to provide clarity and simplification for you. And Mark Douglas talks about this a lot in his book about, trading in the zone. He talks about your trading edge, right? Nowhere in that book does it really talk about this precise number of what the probability of success is, right? But what it does talk about is how to define your edge. And he hones in on focus on patterns that tend better than 50% of the time, which here's a secret, that puts the edge in your favor and gives a higher probability of success. So focus on those patterns that tend to lead to success. So that's one way that the probability is on your side. The second thing is like Mark Minervini does. He wants to take trades after it's come out of a base. A price action is above the 50, above the 200-day moving average. If you apply that as one of your trading rules, guess what? You put the probabilities in your favor. And then one of the favorite ones I like to do, and it's a pattern and a trigger process we use with AutoPilot trading, is I look for my momentum to be shifting up from the lower reversal zone, and I look for my price action to be either breaking through or bouncing off of the 8-period moving average. Adjust that for whatever time period you like, 8-week, 8-day period moving average. And that is a demonstrated and proven high probability trades. So do I need to know exactly what the probability is, down? Well, this is a 75% chance it's going to go. No, I don't. I just need to know, do I have an edge and do I want to take this trade? So that's a pretty simplified process for taking a look at probabilities. I want to know what patterns, what stocks put the odds in my favor. And another really quick one I'll throw out there is if you're trading stocks that are in the lower half or lower half of the industry group that it's in, then the probabilities of it going on to be a successful trade are lower than the stocks that are in the top, let's say 25% of the industry group, which
Mhm.
have a higher probability of continuing to move up in a downtrend. If you're looking at stocks that are falling and they are currently in a downtrend, guess what? Taking a bullish trade on that is a low probability trade. So that's where I see people making mistakes with probabilities, Mike. Hey, Tiffany. What?
That that was robust, and that was one that I'm glad I've got the recording of this because I want to go back and re-listen to that answer again.
Yeah. Well, thank you. So anyway, so Mike, what uh let's just kind of look to one. I encourage everybody. Okay, Mike's got a YouTube channel. Mike's got a Twitter account. So do I. Please join us over there on Twitter, on YouTube, on Facebook, on LinkedIn. Show us some love. Let us know that you're listening and that type of stuff. And also ask questions. Mike and I both love. We're educators at heart, right? But
Mhm.
then you know what else we are? We're darn good traders. Um, and Probably, as I said earlier, you know, the hedge funds and professional traders, if they hit 15 to 30% per year, they are perfectly happy with that. Okay. Autopilot trading for the last 12 years has hit 37.5% every year on average. And just following a very basic, simple process because my objective is to help people. And I know Mike's objective is the same thing, help people who are still working for a living learn how to trade so that eventually they can, with time, get to a place where they can enjoy lifestyle and financial freedom. So, Mike, you know, what else do we need? What else do we need to share, man?
No, think that I think that about does it. Unless if people have questions that are
Yeah, we've left some time for questions. Anybody? Tiffany, you're not out there skiing, are you? Hey, Bruce, how you doing? My Austin, Texas buddy. I went to the University of Texas in Austin and graduated from there with an engineering degree. And it was really funny is the new now it didn't used to be like this back in the late 70s, but now the branding of Austin is keep Austin weird or something like that. Is it still the same way,
what?
Bruce? Yeah, it's keep Austin weird.
Keep Austin weird? That's an odd slogan.
But yeah, but dadgummit, they're proud of it.
Hmm. Okay.
So any questions?
Yeah.
Okay. Well, if there are no questions, what I will suggest, we're going to take 2, 3 minutes here. I'm going to jump over, Mike, and do this.
Oh,
Okay.
what's that? What do we got? Oh, look at that. Yeah, SMCI started to break out while we were talking.
It did. And I'm sitting there going, this looks pretty rich. So what's going on with SMCI? So, Mike, how would you tell somebody to trade this right now?
Oh, well, the level that I was looking at was um I had an alert set at 883.17, which was
Okay.
Thursday's high of day. I really liked that move back through the 50-day moving average. It
Yep.
closed near the top of the range. It did it on heavy volume. The relative strength line started to curl up and started to break out actually ahead of price. That's something that I like. And I also like to look at stochastics. The way that I have my stochastics set up is 2144.
Okay.
And on my screen, they're starting to curl up. And to me, that's a sign of momentum increasing ahead of the breakout.
Gotcha. Gotcha.
So, So when I see that, I start licking my chops a little bit, and I take a look at the pattern. And the pattern that I saw on this was an inverted head and shoulders pattern
Yeah, I can see it.
on the weekly and on the daily.
Yeah, I can see that without a doubt. And that
Yeah,
would basically and let me get my drawing pin up here. Come on.
yeah.
Come on, drawing
I've
pin.
got my descending trend line a little bit different than yours, but it's fairly close, and we're pointing towards the same spot.
Yeah.
Um, yeah.
And
So and
so
then Friday, well, it was a nice inside day. Price held the 50-day moving average, and right now, price is following through.
yeah, this looks very good. We had a big buy day right here that broke out above the 50 on Thursday, like you said, come back and hit off the 50 and it bounces up from there. So really, really looking good. Here's that head and shoulder. There's a couple of ways you can look at a head and shoulders. Shoulder, head, head. Is that what you're looking at, Mike?
Yeah, yeah, that's about right.
And so break out of that, your trajectory to the upside from there is to measure that middle section from there to there, and
Hmm.
that gives you your upside from your breakout point. So it's probably I'm eyeballing it. 1330 is the range that I'd be looking at.
Yeah,
So cool.
that's roughly what I'm looking at as well. I also like to think about, well, where might price start to get into trouble, right? Because that's a good ultimate target. What you have there,
Right?
around 13 or so. But I also want to think about, well, where might price start to get into trouble? Because that'll be where I take my look to take my first scale out, or maybe even my second scale out in this case, because the first spot of resistance that I'm seeing is around 1100.
That would be there or
Yeah, like somewhere in that ballpark.
okay, cool. Yeah, no, I,
Yeah, I
I
was
agree
looking
with that.
at around like the March 26th area. Well, we
Okay.
could start to think like maybe the April 27th, but with the way that this thing moves, if price started to get into trouble there, maybe. But I think that the more likely area would be March 26th. Anyhow, that it's not about like what I think. I like to set up potential areas of where maybe I think that price could go to, but then I
Sure.
have other ways where other signals that I look for, danger signals, if
And
you
so
will.
yeah, I just threw on the Fibonacci of this larger move over here. And so the Fibonacci, and I always bounce back to the left to see if the Fibonacci corresponds with past highs. And so the
Hmm.
50% Fibonacci corresponds with about 950. Up here at the next one, 1015. And then up here, and this probably goes into the ballpark you were talking about, 1109. And that's what
Yeah.
I do with the Fibonacci's all the time. And I that's why I love using Fibonacci's. But I'm liking that, Mike. And the way I would approach this, of course, a little bit different process, but desiring the same objectives is I just like the pullbacks into the 8 period moving average. And so the 8 day
Mm,
tomorrow is going to be about 843.
okay.
And now if I break out, my breakout becomes my new support level. So here's one that I've been watching and having some fun with. And and I will basically here we go. CLSK. Now
Okay.
this is a Bitcoin miner, but it's been running, as you can see, in this confined basically range here. But
Hmm.
this range, and here's one of the things that I love doing is I like finding things that are running in a 10, 15, 20% range, and then I compound the heck out of it by buy at the bottom, sell at the top. So my that upside is 29%. So even if I grab just 15% of that, I'm
Okay.
a happy camper. I'm sitting there going, okay, this is great. This one also, if you're an option trader, this particular entity does have weekly options, which then opens itself up. And Notice how it is bouncing off of the blue line. So I'm looking for bounces off of the blue line, either on the daily chart or the weekly chart. And my weekly chart is also bouncing off the blue line. My blue line is the 8-period moving average. But it sounds so much more poetic to be able to say, buy on a bounce off the blue line. Don't you think that sounds good, Mike?
Yeah, yeah, that reminds me of the talk we had a couple of weeks back with Jeremy.
Yeah, I stole that from him. Just if he happens to be listening, I actually stole that from Jeremy, and because that just resonated with me so much, and it's so easy to explain.
Mhm.
Cool. So, any other questions out there? Any stocks you guys want us to take a real quick look at? There's in excess of 70 people out there, and if you don't have any stocks, that's cool too. But we've got 3 minutes to take a look at a stock you want us to take a look at.
It looks like we've got a halfway decent reversal going. Yeah, a bunch of weakness earlier this morning. Now all of a sudden, the
Yep.
indexes and a bunch of stocks are sitting at their highs and starting to move.
Let's see what TQQ is doing. TQQ, I love trading TQQ. I've traded TQQ 4 times this year already. Now this is the one that I utilize for compounding,
Hmm.
and currently on those trades we're compounded out this far in the year at 72%. So I'm really pleased with that. And that's one of our go-to trades that we do repeatedly throughout the year.
Yeah, great.
And what else?
So when it jumps above the line like that, well, what does that tell you?
It tells me to go look at the. I look at the non-leveraged ETFs first. When it
Okay.
jumps, and look what's going on here. I'm almost up to the 100% move from the breakout here. So that's equivalent to this. That's equivalent to what I have from here to here. So I'm
Okay.
almost up to 200%. When we break out above the upper trend line, that oftentimes is a signal that it can't continue on with this, and we should get some kind of a pullback in the near future. That's one of the
Hmm.
things that IBD talks about. But clearly, way extended. Am I going to short this by taking something like, doing puts and that kind of stuff? No, I'm not. Why? Because it's in gear to the upside. All the moving averages are going that way, right? And so I'm just now waiting for, okay, what do I need? I need a pullback into where the 8-day moving average or the 8-week moving average is going to be. And by making that part of my rules, it provides me the reason to wait. And as you
Mm.
know, Jesse Livermore said, he made most of his money sitting on his hands doing nothing. So cool. Okay. Hey, Mike, I'm gonna go back. Let me get out of here. And so, hey, if you all liked Mike and I going digging in on some of the other where are we? Where are we? There we are. If you guys like Mike and I digging in on stocks and that kind of stuff, let us know that you'd like us to do more of that, and we'll be glad to include a little bit of a stock aspect with our podcast, because we are both swing traders and technical analysts. So just let us know. So, Mike, thank you so much, man.
Yeah, thank
I think
you.
I think it's been a good session, huh?
Yeah, likewise. Yeah, it
And
always is. Well, it's always great speaking with you, Dennis. I thoroughly enjoy it. Hopefully everybody else does too.
so, okay, Mike, and so I'm going to end the stream, and so hang on.
All right.